This video/stream is sponsored by Trader Central. Trader Central provides funding for traders, spot cryptocurrency exchange services, and access to trading tools like copy trade software, portfolio tracking, and a social platform exclusive for communicating with trader friends. Sign up now using the link in the description and get up to 30% off on your first plan.
Hey guys, welcome back to my channel. How are you all doing? Hope you had a great week this past week, as the market gave us plenty of opportunities to capitalize on. In this video, I want to talk about my analysis for GBPUSD, and I'll start off with the weekly time frame and work my way down to the 4-hour time frame. And as you can see on the weekly time frame, last 3 weeks, price has been strongly bearish, pushing all the way to the downside, all the way to the 1.23 area, which is what I've been expecting as well. And you can see that area also coincides with the support level here. Price tried to push below it, but ended up closing above it this past week, and I hope you're able to capitalize on this massive move. What I'm expecting from this pair still is a continuation of this down move. I'm expecting price to get all the way to the 1.2 area, 1.21 area, as I mentioned in my last couple of videos. I'm possibly even breaking that down. If this level breaks, then I expect price to continue all the way down to the 1.6, 1.16, 1.17 area. But for now, price now is at this support level at the 1.233 area, and price seems to be stalling there as well. Then we'll see how price reacts to that area, if it bounces off it or if it breaks that level. So we are at a very good area to capitalize on a massive move, and whatever moves happen here now in this area will be very significant. So you can see that the daily candle on Thursday, you can see how massive the bearish sell was, and just like my analysis on GBP, on Euro USD, this ascending channel broke above it. I say when you have an ascending channel like this, most of the time price would break to the downside, so it is a continuation signal for sell trades. Okay, and most of the time it is a signal to sell. So even if you have a trade like this, for example, say coming from the downside, and you have it going up, and then the trades give you this sort of ascending triangle kind of thing, then most of the time you expect that that trade would break to the downside. And if it's coming from the top, okay, and you are having this trade going up this way, okay, most of the time it breaks to the downside. So this sort of ascending triangle pattern mostly is a downward move. So that is what I expected, and that is what has happened in the GBP USD. So now that broke out, and then we are now at a support level which is quite significant, and price forming this off rejection, this sort of little pin bar there, saying that, you know what, we are trying to push price back up and we don't want to go to the downside, so there's a bit of a stall. So, and if we go down to the daily time frame, we can see that price is ranging just within that area there and hasn't broken it. But again, like I said, if the price breaks and closes below this area here, then most likely the price will continue to the downside, and again, which is what I'm expecting, generally speaking. But on the other hand, there may be a bounce from this area as well, and the reason being, one, we are at a very significant area of support, okay, so price can easily bounce from here. Two, if you look at this massive rejection here as well on the daily candle, so this here is showing you that there is some buying pressure around here as well. And thirdly, if we go mostly to the 1 hour time frame, we can see not a very good one, but it's still present. Then that is this head and shoulder pattern. Again, not a very good head and shoulder pattern, I would say, but if price ends up going towards the upside. Okay, so if you're going to trade this inverse head and shoulder pattern, my advice would be wait for price to break the neck. Okay, don't rush and take the trade from down here. Wait for price to break the neck of this inverse head and shoulder pattern. So wait for price to get up towards this area here. Okay, breaks it, possibly comes back to test that area again, and then you can look for your buy trades to the upside, possibly to the 1.25 area or to the 1.255 or 57 area here. So this is what we'll be looking at, or even just all the way to this area here, more like retesting this channel that has been broken out because it hasn't really been retested before. So we'll be expecting price to go back there to retest it, and then we'll be looking for sell opportunities for price to continue to the downside and then break it. Like I said, I'm still expecting a sell trade, but there could be a retracement to this level. And again, for us to see how significant this is as well, if we draw our Fibonacci retracement from this swing high, okay, to this swing low, all right, we would see that where we are targeting, okay, this area here around the 1.25 area, if this inverse head and shoulder pattern does play out, this area falls within the 0.618 Fibonacci level. Okay, that's 1.25. So if indeed that area breaks, okay, and our inverse head and shoulder pattern works here, if this inverse head and shoulder pattern works here, then we should be looking to take our take profit around the 1.25 area and then entering when price breaks the neck. So the neck will possibly be around this area here. This is where the neck will be. So price breaking this neck, comes back to retest it, we'll be looking to take our trades there, and that's around the 1.2317 area. Taking our trades there, and we'll see how we'll be able to capitalize on that, and that should give us about let's calculate. Yeah, you're looking at about 100 pips, 120 pips on that particular move, which isn't bad at all, and you'll be risking about 30 to 40 pips on that trade. So a very good risk reward ratio and a very good trade to take and capitalize on as well. So we'll just be very careful when you take the trade. So normally I would take my trade at a 2:1 risk to reward ratio when I do take this particular trade, because I expect it to come down here, because a lot of people want to put their entries just below there, and price may just end up taking you out before continuing to the upside. So this is my analysis for GBP USD. Generally speaking, I'm expecting price to continue to be bearish, but in the meantime, there could be a possible retracement to the 1.25 area before shooting all the way to the downside. So this is my trade for GBP USD. I hope this video has been very helpful. If it has, kindly leave a like, and if you haven't subscribed, kindly subscribe to the channel for more daily and weekly analysis videos. Thank you very much for watching, and have a great week ahead. Peace.
I can't forget the day we met. Your eyes so blue, me pressing through. I can't forget the day we met. Your smile so bright.